Welcome back, it's JWalter here, and here's your latest California housing market update. In today's video, I'm going to be sharing a new report from the California Association of Realtors. In this report, they state that first quarter 2022 housing affordability is at its lowest levels since 2007. In addition to this, the levels we're seeing right now are even worse right now because mortgage rates and home prices have increased, and more on that later. So let's go ahead and dive right into the video here. This is the latest report from the California Association of Realtors. They just posted this on the 3rd of May. So they said that California housing affordability shrinks in the first quarter of 2022 as home prices set record highs and mortgage rates also rose as well. So it says here, California's median home price set a new all-time high in March, and I can share some data regarding that. And mortgage rates reached their highest levels in more than 2 years. Actually, mortgage rates right now are at the highest levels since 2008. So mortgage rates have increased greatly since the first quarter of 2022. More on that later. And because home prices have reached all-time record highs and also mortgage rates have increased greatly as well, housing affordability for California was diminished in the first quarter of 2022. So let's talk a little bit about the median sold price reaching all-time record highs in March. I reported this to you guys about a couple weeks ago. According to the California Association of Realtors, the statewide median home sold price in California was just under $850,000. That's an increase of 11.9% compared to March 2021. However, in this report here, they're talking about home prices for the first quarter of 2022 when home prices were a lot lower. So housing affordability is even worse now than this report here, and I suspect will reach very low levels in their next report of Q2 of this year. The percentage of home buyers who could afford to purchase a median price existing single-family home in California in the first quarter of 2022 trickled down to 24% from 25% from the previous quarter, and down from 27% in the first quarter of 2021. So to summarize this, only 24% could afford to buy basically the average price home in California for the first quarter of 2022. And here's the key stat. For the first quarter of 2022, that figure is less than half of the Affordability Index peak of 56% in the first quarter of 2012. In other words, we had a peak, or meaning houses in California were the most affordable back in the first quarter of 2012, when approximately 56% of the people could afford to buy the average price home during that time. Now it's less than half of that at only 24%. And check this out, because this is pretty mind-blowing. A minimum annual income of $158,000 per year was needed to qualify to purchase the average price home in the first quarter of 2022, which was $797,000 for an existing single-family home in the first quarter of 2022. So in other words, you need approximately $158,000 in annual income to buy the average price home in the first quarter of this year. And by the way, that payment based on principal, interest, taxes, and insurance, basically your whole housing payment, would equate to $3,950 per month, assuming a 20% down payment and an effective composite interest rate of 3.97%. There's some key stats here because right now, of course, mortgage rates are over 5.5%, not 3.97% in the first quarter of this year. On top of that, home prices are over $797,000 in California as well. As I shared, the average home price is $850,000, not $797,000 right now. So when looking at the average price home in California and also average mortgage rates during the time in the first quarter of this year, that would equate to just under $4,000 per month for your housing payment. However, have a look at what happens when you look at current prices and also current mortgage rates. So again, the average home price right now is just under $850,000 in California. That's the median sold price as of March, the most recent stats we have for you guys. Assuming a 20% down payment, which by the way would be $169,000, and a loan balance of $679,000, a mortgage rate, this is the current mortgage rates as of today, which is the 4th of May, at 5.57%, the highest levels we've seen since 2008. Assuming a 30-year fixed rate mortgage and also home insurance of approximately $1,200 per year, and taxes of $10,625. That'd be approximate averages because in California, our average property taxes is around 1.25% based on the tax assessed value. So I basically took 1.25% and multiplied that by $850,000. And that gives you property taxes per year of $10,625. In any case, when you look at current home prices and also current mortgage rates, that housing payment is now $4,872 per month and not $3,950 per month. So in other words, because mortgage rates have increased greatly, and of course, because home prices have increased greatly as well, that has caused an increase in your housing payment by approximately $1,000 more per month. Here's something else I also found to be mind-blowing because this was all for single-family houses. Let's have a look at condos and townhomes in California. So that also reached an all-time record high in the first quarter of 2022 for home prices for condos and townhomes. And 32% of California households earned the minimum income to qualify to purchase the average price condo or townhome at $640,000. So in order to qualify to buy the average condo and townhome in the first quarter of 2022, you need an annual income of $126,800 per year in order to afford the average condo or townhome in California. And that would be a total housing payment of $3,170 per month in order to buy the average condo or townhome in California. So obviously we pay a lot of money to live in California. So let's have a look at how this compares to the nationwide numbers here. So nearly half of the nation's households could afford to purchase a $368,000 median price home in the United States, which required a minimum annual income of $73,200 to make monthly payments of $1,800 per month. So on average across the United States, the median sold price for the first quarter of 2022 was $368,000, which is basically less than half that of California at $797,000. So you need an annual income of $73,000 to purchase the average price home in across the United States. But in California, you need approximately $158,000 in annual income to afford a house here in California. And here's some additional key takeaways regarding this report here. It says compared with the previous quarter, which would be for Q4 of 2021, housing affordability in the first quarter of 2022 declined in all but 2 of the 51 counties in California. Affordability was improved in Mendocino County and remained unchanged in Humboldt County. Meanwhile, Alameda County, which is in the East Bay, that's like Fremont and Pleasanton, just east of San Francisco, was the least affordable Bay Area county at just 17% of households being able to purchase the median sold price home there at $1.37 million. So in other words, only 17% could afford to buy the average price home in Alameda County for the first quarter of this year. On top of this, in the Southern California region, Orange County was the least affordable at 13%. So in other words, approximately 87% of the people who live in Orange County cannot afford to buy a house there. So only 13% could. In the Central Valley region, Kings County was the most affordable at 51%, and San Benito was the least affordable at 24%. In the Central Coast region, Santa Barbara County was the least affordable at 12%. So in other words, approximately 88% of the people can't afford to buy a house in Santa Barbara. And for the state as a whole, Lassen County at 61% remained the most affordable county in California. And Lassen County, by the way, is just east of Red Bluff and Redding, by the way, in Northern California there. Lassen also required the lowest minimum qualifying income at $48,400 per year of all counties in California to purchase the average price home there. Mono at 7%, Santa Barbara at 12%, and Santa Cruz at 13%, and Orange County also at 13%, were the least affordable counties in the state, with each of them requiring at least a minimum income of $205,000 per year in order to purchase the median price home in each of those counties. That's pretty crazy. Think about that. You need over $200,000 in income to purchase the average price home in those counties there. San Mateo had the highest minimum qualifying income to buy a house there at $435,000 per year. So in other words, if you want to buy a house in San Mateo, you need at least $435 a year in order to purchase the average price home there, which I think at this time of this video was approximately $2 million is the average price home in San Mateo. 3 other counties in California also had a minimum qualifying income of over $300,000 in the first quarter of 2022. That was Santa Clara at $371,000, San Francisco at $366,000, and Marin County, you need a qualifying income of $329,000 per year to buy the average price there in Marin County. All right, changing gears slightly, let me share some graphics with you guys here to give you an indication about how really crazy, how low this affordability is and how big of an issue housing affordability is across the nation, really, and also in California, of course, as well. So here's housing affordability remains near its lowest level since 2007. So right now, 24% of the people can afford to buy the average price home in California for the first quarter of 2022. Compare that to nationwide. That's 47%. So almost double the share we have across the nation compared to California. As you can see here, really ever since the peak of affordability, meaning houses were the most affordable in 2012, housing affordability has been dropping drastically because home prices have increased greatly as well. So here's housing affordability in California ever since 2006. Again, right now, 24%. The peak was basically in 2012 at over 50%. As you can see here, we had a big drop off in 2012 and 2013, and basically a slower downward trend of housing affordability at 24% right now. So here's a really interesting stat here. Here's a housing affordability peak, which again was a Q1 of 2012 compared to current rates right now. So again, across the United States right now, the affordability index is at 47%, meaning 47% can afford to buy the average price home in the United States. The peak, though, in Q1 of 2012 was 71%. So we went from 71% being able to afford to buy the average price home down now to 47% across the nation here. And in California, we went down from 56% down to 24%. Condos and townhomes, a big decline, 65 to 32%. Los Angeles, Inland Empire, and San Francisco Bay Area all had big declines compared to the peak of housing affordability back in Q1 of 2012. And here's the minimum annual income required in order to buy the average price home in Q1 of 2012 versus Q1 of 2022. Look at this. California, for a single family home in 2012, you only needed $56,000 per year in income. Now you need $158,000. That's an increase of 180.5%. It's pretty remarkable and sad, really. Los Angeles, also a gain of 171%. Look at this, Inland Empire, a gain of 216%. Back in the peak of affordability at $35,000 was the income required. Now you need $111,000. San Francisco Bay Area as a whole, you need $267,000 per year in annual income to buy a house there. Here's an interesting stat here as well. Here's the monthly, this PITA is principal, interest, taxes, and insurance. In other words, your total housing payment. Here's your monthly housing payment during affordability peak versus current. So again, the affordability peak, meaning houses were the most affordable, that was back in Q1 of 2012. Your monthly housing payment then was only $1,410 per month. Now it's just under $4,000, an increase of 180%. And have a look at the San Francisco Bay Area because the average monthly payment in Q1 of 2022 was $6,690 per month compared to $2,260 back in Q1 of 2012. That's a gain of 196% compared to a gain of 128% when you compare levels compared to nationwide. The increase in mortgage payments compared to 1 year ago is also pretty astonishing as well. So in California, for the single family home, we have an increase of 20.4% in the average mortgage payment. When we compare that to the United States, we have a gain of 26.2%. So back in Q1 of 2021, 1 year ago, it was $1,450. Now in the US, the average mortgage payment is $1,830. Compare that to California, $3,950 per month. In other words, a gain of over $2,000 more per month to live in California. So comment below with your biggest takeaways from today's video. Also, if you got any value out of today's video, then please hit the like button. I greatly appreciate that. Also, consider subscribing as well. Hope you have an awesome day and look forward to seeing you on the next video.